There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Welcome, Auvorians, to the hopefully broadcasting decent and hearing me on the mic midweek software strategy session and morphed into macro discussion. I just want a quick note here. I think everybody's probably getting dialed into this, but this whole Discord transition update, I do not have a Discord room, okay? I think at some point I should probably set one up, but there's a fair amount of chat going on in the other software rooms. I think some of the suggestions that they've made as far as setting up the rooms here have been really good. So let me know if you guys want something that's like a little more, chatty, if you will. I am hugely against useless banter. I don't do it on Twitter. I don't do it on any sort of thin media or any kind of social media. I'm basically, I'm always a proponent of, just putting out quality, salient information that can help you make tons of money, which is really what all this stuff's about, right? Making money. In any case, my name is Steve Vetterl. Welcome to the 24th of August midweek software strategy session. I try hard, actually, why am I opening this again? I try hard to go through and just make it easier for you guys from a macro perspective, try to reduce risk, all that fun stuff. Actually, let me make the screen a little bit bigger here. Can't do without my bookmarks. All right, there we go. So for those of you who do not follow me on Twitter, if you have a Twitter account, I am at FXES Trader. I try on this particular stream to retweet stuff I feel is important. Market sentiment, I have nothing to do with it, but he puts out super quality content. And I gotta tell you, I'm not really sure how the reverberations or the waves, if you will, I talk about of risk, will come into the U.S. equity markets from what's going on in China, which could certainly wave out into other markets, right? Remember, I talk a lot about pin action, and its varying degrees of risk that can sift into or essentially soak into every market globally, right? So this is a really good piece on just talking about how this whole Chinese ghost property craziness is really just starting to unravel, and it's an issue. So I don't know if, and honestly, there's no way, and I publicly, if I was Jerome Powell, head of Federal Reserve, would not be talking about this, but they talk a lot about tailwind risk, and this is absolutely something that you probably should keep a tighter control on. I'm going to be bringing this in into the whole, just understanding of what's going on, and you're always looking for sort of, little birdies in your right ear, if you will, of potential global conflict or problems or any, this one could be pretty big. Not a surprise. I've been sounding the alarm in varying degrees of China for I don't know, almost a year now in my podcasts and the different casts that I do weekly here for both personally and with Auvoria. So just keep in mind, you can read through this thread. It goes through a lot of really good statistics on what's going on to keep you all plugged in. So what are we waiting for? Always make sure you get the dates right here, by the way. We are waiting for this. Plain and simple. This is what we're waiting for. So I talked about this on Saturday. I think that the Jackson Hole Symposium, which for all the off-the-grid and conspiracy theory folks, they will tell you that it is just another version of Davos for the elitist bankers and globalists and all that, and they just get together and try to figure out how to completely screw the common man. Whether or not that is the case, it certainly could have tones of that, but my hope is that some constructive policy framework can be continually honed down upon or made better by these meetings, right? So that's my goal. I'm always trying to give everybody the benefit of the doubt and the do-gooder for humankind here. So, but really the bottom line is is the Fed pivoting to a different stance from being hawkish to now dovish, right? Good or bad for the dollar, depending on which way they go, and then good or bad for the dollar moves into every other currency. So just keep in mind on that. Let's move into the dollar. Do want to show you that I'm not going to really get into equities today. We've had a couple of days of pullbacks. I've talked a lot about that recently. As far as the dollar, we're back up at the highs. What do I take from this? We could blast higher. There's a lot of problems going on in Euroland, whether it's ridiculous energy prices skyrocketing, and obviously the geo events relating to any type of pin action off of what's going on in Ukraine, pandemic, inflation, bad policy, they're all sort of coming together to create what at least some of the alarmists would say a perfect storm of craziness, right? So that, for a whole host of other reasons, has left one currency on this planet in favor and everything else not. So, at least in Major's land. So just know that until those prevailing winds change, or there's some slight directional change in that, without any great insight, of which right now at this point, quite frankly, I can only offer you what I see, right? I don't know how great this is going to be for the future, right? But I have told over the last 6 months that a risk-off positioning, especially if you're over leveraged in your portfolio and whatever you're invested in, is the way to go. We've delevered in a lot of particular areas for our clients, and at some point we'll be sifting through the ashes, and risk on will be the case. But for now, dollar lift, everything else down. So euro, here we are back to basically parity. I find it amazing that just general, let's just say the global community as a whole, is finally waking up and realizing that we're actually at parity. We've been here for basically a month, right? And things are cheaper from a conversion perspective from dollar into anything in Europe, for that matter, right? So here's the chart, new lows. Certainly could expect new lows. In many of these cases, whether it's the dollar chart or the euro, you're going to have to go to a monthly to see what's going on, okay? What do you mean by that, Steve? Well, you're going to have to go back and see when was the last time we were at this area, right? It's been a long time. It's basically 20 years since we've been in this area. The problem with showing any kind of chart of this duration is this, and where we were trading back here, support and resistance? No. Because it was so long ago, it doesn't even matter, right? It's a reference point. Yes, if we did get down to this is so much further down than I would have thought, but if we do get down to this area, yes, there will be a reactionary bounce off that would probably be big, right? I would not be trying to short these lows. I'd be buying the bounce, which could be a generational long trade for something like this, right? Who knows? Could be a long way down. But I do know that we're at a very important support point. It's that simple. And that's a buck. A buck for a buck, okay? So just know that. How long are we going to spend down here? How wide is the trade going to be? How much are we going to be basing in building any sort of bottom? I have no idea. All I know is that, you know, currency markets, most of them, they're looking to see where the next shoe is to drop before they decide on whether there will be any reprieve and risk on, or a current prevailing wind continuing to get stronger and risk off. So this is the pound dollar, again, on a monthly chart. So each of these candles represents a single month. Let me just, purposes of where are we in relation to history, we have to go all the way back to, is that right? We got data back to 1989 here. That's actually pretty good. So the lowest ever this has been, which is damn near parity, was 1985. Wow, that's crazy. And then we had data. Yeah, it looks like TradingView's got it's got more back data coming in from like eons ago. That's actually good to see. I haven't seen anything in the 80s yet in this software, so that's the first. It's almost like I wish I could do a data scrub. This is one thing I love about LensSoft, which is a futures trading software for market profile. You can actually do what's called a data scrub, where it'll go back and scrub down to almost every tick. It requires a lot of computing power to be able to do it, but it'll scrub it all the way back. I can't do that in TradingView, so I have to rely on whatever accumulated data comes in. But you know, again, not much reference point. I don't know how much you know, comfort this brings to traders, but you know, we can look all the way back to 1985, see what the current rates were at the time. So I mean, it's pretty big area of support. Just drop back to a daily chart. Do a reset here. So support right here, 117.50-ish area. Let's take a look at CAD. Just a daily chart, we're in the middle here. Quick look at the yen. Just daily charts for now here. Just want you guys to see if there's anything outlandish going on. The answer is yes, pretty much everywhere, right? But in terms of many of these charts, we are still building sideways trading. As you can see, I'm just going through each of these, seeing what I see. New potential lows here. Euro Aussie. GBP CAD, one of the more popular ones. Looks like new lows coming. Amazing, some of these moves, I'll tell you. I think we'll be looking back in the history books going, wow, what the hell were the human beings doing around 2022? Take a look at spot gold, oil. Keep in mind these are daily charts. So just know that oil has been, since this point, which is what, the 9th of June, it's been going down since. If you look at the gasoline chart, which I'm not going to show, it's even better in terms of the declines. It's been a lot of declines. Let's take a look at the crypto markets. This one is, let me stretch this out here. Took a big hit. You know, looked like we were building for a bigger base for that potential rip back up right here, but then that ended real quick, right? So we're just, usually when markets do this, and I can't really necessarily say this as much for crypto because it trades very differently, but it is beginning to act more in line with how, a futures markets would trade, in my opinion, just based on the duration and the data and the trading and all that. We still don't have centralized exchange, which is the big issue with me. With anything, it really is the problem with the currency markets, because the people say, oh, well, it's 10x any other market. Yes, in some cases more. That's true, but it would be much, much better if trading was centralized among two exchanges, right? So let's say Eurex did trading of currency centralized on a central exchange, and NASDAQ did in the US, or some version. There's plenty of other exchanges that you can trade on. You can trade on ICE, you can trade on CME. Those are the four big ones on this planet, at least as far as developed markets. So the bigger boys will play in this area because it's just a much more proven sandbox, right? They're not going to pull the sides of the sandbox out on you and take all the sand out while you're asleep, right? That kind of stuff. I'm not sure that's maybe necessarily the best analogy, but I've had more than a few people DM me, including clients, saying, why are you always complaining about decentralized exchanges? Well, there's risk in there, big risk, because if you don't trust the data on the executions, how can you analyze or do any kind of technical analysis, right? You can't. So you can do it to the best of your abilities, which I find TradingView to be one of the better ways to do that. So, all right, so we got our ideas on news. We know what to look for. I'm going to cut this off right here. I've gone through exhaustive amounts of material over the last 5 or 6 weeks. So in lieu of, any new thoughts on this or any comments on it, I would go back and watch some of that stuff. It's on both the Vimeo channel and YouTube as well. So I wish everybody a great week of trading. Thank you very much for attending. Spread the word of risk management to all. Have a great week.